Hey everyone, and welcome back to the channel. Today we're going to talk about the dark truth about billionaires and their taxes. Let's get right into it. According to a report titled Billionaire Bonanza 2020, Amazon founder Jeff Bezos increased his already massive fortune by $75 billion during the first 17 months of the COVID-19 pandemic. During the same time period, fellow aspiring astronaut and Tesla CEO Elon Musk reportedly increased his wealth by $150 billion, while Facebook co-founder Mark Zuckerberg increased his wealth by $74.2 billion. The report, co-published by the Institute for Policy Studies and Americans for Tax Fairness, examines the accumulation of wealth by U.S. billionaires during the pandemic era. Since it was last updated, the estimated wealth of all these phenomenally wealthy individuals has only increased. Despite their individual economic growth, the country's wealthiest people frequently pay no federal income taxes. According to ProPublica's widely read in-depth reporting on a vast trove of recently leaked Internal Revenue Service documents, billionaires such as Bezos and Musk have all avoided paying any federal income taxes in previous years, some for multiple years. Income from wealth and income from work are taxed differently. The vast majority of working Americans are paid hourly or on a regular basis. Income taxes are typically deducted automatically in both cases. People with a high net worth, on the other hand, frequently derive the majority of their income from assets such as stock holdings, real estate, or other investments. As the value of those assets rise, the stock market rises, pieces in their art collection become more expensive, the real estate market shifts in their favor, so does their total wealth. That income is only taxable if they actually sell the asset that generated it. Unlike ordinary wage and salary earners who must pay taxes on their earnings in real time, very wealthy individuals can choose whether or not to pay taxes on the growth of their wealth. The current federal income tax rate at its highest imposes a 37% tax rate on individuals earning $523,600 or more and married couples earning $628,300 or more. It is not uncommon for business owners with a high net worth to pay themselves lower salaries in order to avoid the tax rate in this income bracket. For example, as Amazon CEO, Bezos earned only $80,000 per year. Apple co-founder Steve Jobs, former Hewlett-Packard CEO Meg Whitman, Google co-founders Larry Page and Sergey Brin, and Facebook Zuckerberg all accepted $1 per year salaries, most likely for the same reason. Wealth can be translated into spending money without being taxed. How is wealth income used to purchase something if it functions and is taxed differently than work income? How does an asset become spendable money? In a nutshell, wealthy people frequently rely on loans. For many of these people, rather than selling stocks or real estate and using the proceeds to fund their lifestyle, they borrow money and use it to fund their lifestyle. Banks are much more willing to make large loans to wealthy people with extremely low interest rates. According to Business Insider, billionaire investor Larry Ellison, for example, used some of his stock shares to open a $9.7 billion line of credit in 2014. Last year, the outlet reported that Musk used a portion of his Tesla stock to secure a $550 million loan. Borrowed money is not taxable because it is not considered income, so a bank will consider someone with a few $billion in stocks or even a few million to be very low risk. As a result, they can fund their lifestyles and truly enjoy the benefits of their earnings without having to pay taxes on them. Rich people hire lobbyists and lawyers devoted to keeping their taxes low. People with a lot of money often use their money to hire professionals, donate to lawmakers, and invest in policies that keep their taxes low and their wealth growing unrestrictedly. Unlike most ordinary Americans, wealthy people have the ability to shape laws by having their voices heard at every stage of the legislative and regulatory processes. They have armies of lawyers, accountants, and lobbyists who weigh in on legislation and regulations and can assist them in going to court to challenge the IRS. Tax lobbyists working on behalf of the country's wealthiest individuals and corporations facilitate and maintain direct access between wealthy people's economic interests and policymakers, essentially ensuring that the country's wealthiest individuals and corporations have a consistent foothold on Capitol Hill. Taxation is consistently one of the top 3 most lobbied issues in Congress. Furthermore, high net worth individuals frequently hire tax lawyers who are well versed in the tax code and can do the heavy lifting of finding loopholes during the tax filing process in order to legally save their clients as much money as possible. Tax lawyers also prepare for the possibility that their multi-million or multi-billion dollar client will be audited by the IRS, a disproportionately rare practice that allows the wealthiest Americans to illegally avoid paying an estimated $175 billion in taxes each year. Due to years of repeated budget cuts, the IRS rarely has the staff or internal resources to conduct the costly labor-intensive auditing process required to force the largest corporations and wealthiest individuals to pay what they owe the IRS and any associated penalties. Those missing billions are currently required to fund a number of major national initiatives and much-needed infrastructure investments. That's it for today. If you guys enjoyed the video, make sure to hit that like button. Don't forget to subscribe and turn on that notification bell so you never miss out on any future content we'll produce for you guys. We're signing off now, but we will be sure to catch you all in the next one.